Lance, Connor, to our first 2020 webinar on discussing investments, markets, where things are going with One Capital. We've got Stephen Cowley, who's the Chief Investment Officer with One Capital, as well as one of the partners there. And we've got Lance Messervy, who is the Senior Portfolio Manager, and he's the one that manages all of our clients' accounts. In a way, he's the mechanic. He does the buying and selling, and he deals with all the trades. You probably all talk to him. So what we wanted to do is ask a few questions here. We may break this webinar up into segments because we have a few questions and we don't want to make each segment too long. So we may send these out to you in a series. So why don't we get started? I'll start with you, Stephen, just because you're the Chief Investment Officer there, and I wanted to ask you, in general, how has the impact of COVID been felt on your clients' accounts, our client accounts, overall?
I was going to say, depends on the day that you ask that question.
Yes.
Obviously, had you asked that question early in that pandemic, we would all be, talking about, the significant sell-off in the market at the beginning when we all were worried about it and what was happening. And then since then, of course, the markets have really come rallying back. However, it's really a mixed bag because even though the indices are hitting new highs in a lot of cases, obviously not all across the world, but especially in the United States, it's really it's a fragmented market right now. So it's not, everything hasn't come rushing back. So there has been impact from COVID. Different sectors, obviously, we all know that, you don't travel much right now. Airline stocks are way down. Obviously, cruise stocks are almost non-existent because, nobody's on a cruise line. Nobody can go on a cruise ship right now. So there's been some significant impact from COVID. Retail obviously was shut down. It's online. It's moving back and forth. But from an investment standpoint, for the most part, accounts are doing okay. And I'm going to say okay because, like I said, it's a really a fragmented marketplace. The technology stocks have done very well. A lot of the consumer stocks have done well that are the large companies that are taking advantage of, online retail and things like that. So there's a lot that's done well through this pandemic because we've been stuck at home. People are using their computers. This call that we're having right now, these are things that we wouldn't be using this type of technology without the pandemic. We would, but not at the levels that we are. So it's affected our portfolios because some things have done really, really well. And Lance is going to get into some of the stocks that we've added to the portfolio and that we owned before that have done really well that maybe were even a surprise to us. And then, of course, there's a lot that haven't done quite as well. Energy, and of course, energy in Canada is a big deal. Energy's done, very, very poorly because people aren't using energy because we aren't traveling, we aren't shipping isn't happening. So there's a lot of reduced demand there. However, at the same time, globally, Russia and Saudi Arabia and the U.S. have actually cut back production, so that should start coming back. So while it's been a really drag on the markets, if you will, it actually should be going forward one of the brighter spots. Not today, not tomorrow, maybe not 6 months from now, but prices are low, companies are lean, and they should do well. So it's kind of a mixed bag. The portfolios are doing okay overall, but within them you're going to see some things are doing really well, some things are not doing so well.
So maybe Lance, if you could expand on that and just let us know from the portfolios you manage for our clients on both sides, what's done well, what hasn't done well, and then what sort of the strategy is going forward.
Yeah, so thanks, Glenn, I appreciate it. What I would say is the COVID pandemic that hit in March early this year, it really gave us an opportunity to retool and relook at the portfolio and see where there's opportunities where we feel are, we're going to see potential near-term growth as well as long-term growth. And what we saw was, a few different names, which we can touch on. One would be PagSeguro, which is a Brazilian fintech company. And one interesting thing there is, as we saw, the increase in online spend and online banking, you really started to see that a PagSeguro, a fintech, sector and fintech as an industry really started to take off. One thing we liked about PAGS that was one of the major reasons why we brought it into the portfolio is, we're all familiar with a company called Square, and PAGS gave us an opportunity to enter in the fintech space where Square was probably, let's say, 4 to 5 years ago. So it actually was a great entry point for us, and we were able to take advantage of a somewhat, depressed market with a great catalyst going forward. And as the economy continues to rebound, but things still will be translating and moving more to online payments, it's only going to help bolster, and continue to improve, our investment in PagSeguro.
Lance, let me make just one point in there, and for you, Glenn, as well, and for your clients. I mean, one of the nice things about PagSeguro, and one of the unique things we had, is that Lance lived down in Brazil for a couple of years, which is where this company was. So as we were discussing in the investment committee, because I didn't understand the economy down there, I was literally able to turn to Lance and say, "Hey, Lance, you lived there. Does this ring true?" And and Lance was able to enlighten us about Brazil and how Brazil works and stuff. So I just wanted to point that out because it shows the depth that we have. I spent a couple of years in Colombia. He spent some time in Brazil. We have people who lived in England. And Ireland for a number of years. So we have a pretty deep understanding of not just the financials, but what happens around the globe.
Yeah,
so I just want to point that out because
you even had some people who lived in Canada.
Exactly.
Right? So imagine that, the Great White North. So that's one that's come in. What were some of the ones that through COVID? They experienced a downturn, their stock price got reduced significantly, that you sold, or that you reduced the weighting in, sector-wise.
One that we can touch on, and Steve, you can jump on the macro side of it, is we reduced our exposure in European banks, and we sold off BNP. And one of the reasons why we entered that position was, they were a great diversified bank, and they had a healthy dividend, and it proved to work well for us for some time. But when from a macro perspective, when the pandemic hit and put a little bit of a pinch across the globe, European banks definitely were a place where we were leery at that point to continue to hold investments in.
Okay. So on looking at going back to your kind of original answer to my question, what happened? Which sectors have you increased weightings to, and which sectors have you reduced your weightings in the portfolio? As far as the industry sector that we're talking about.
Mm-hmm. Do you want me to take that one, Steve?
Yeah, go right ahead.
Okay.
Yep.
Yeah. So I would say, as far as increasing weighting, we definitely added to healthcare, and we added to our technology space. We also I would say, increased our weighting in our consumer discretionary, while reducing weight in energy. And this would say, this year, right, 2020, and post-COVID, post March.
Okay, great. So
let me just add, not so much an industry, and he touched on healthcare, but one of the companies that Lance was very instrumental in us adding to the portfolios would be Regeneron, which we bought actually late last year for an eye thing, but it happens to be one of the leading drug makers in the COVID space as well. So Lance could even touch a little on that. So some of the things that we did at the end of last year, not anticipating this, have actually paid off for us as well, because some companies that had diversification into this space have really done well for us.
And when you talk, what sort of returns have they earned year to date? Do you know?
For Regeneron, Regeneron definitely is probably 150%